Finance is over. Shocking, but that is the truth. 1,000 transactions per second. It is infallible. It never tires. What happened to the 500 experts on Wall Street? Code fired them. One bank deleted 500 analysts. The question is shocking. When did your financial advisor replace themselves with a robot? This is not a story of automation. This is a story of who controls the money. Is your money safe? No. Because the decisions are being made by artificial intelligence. Your credit score, your retirement, your future. How are they all left to the mercy of an algorithm? Let's begin. Remember the 2008 crisis? We crashed because people were greedy. But what if artificial intelligence becomes more greedy than humans? AI started on the stock market as high-frequency trading, HFT. This is a system that trades thousands of stocks per second, operating at the speed of light. Used to be, a trader read the market. Now, AI creates the market. While a human needs milliseconds to make a trade, an algorithm can execute thousands of transactions per second. This speed difference wiped out the high-salaried human traders from major banks. Now, the main game is in investment banking. Mergers and acquisitions, M&A desks were the most prestigious places in finance. Millions of dollars in bonuses were earned there. Now, an algorithm can predict the potential success of a merger by reading hundreds of pages of legal text, 40% more accurately than a human analyst. Is an AI only looking at reports to understand a company's financial risk? Or is it picking up a hidden signal from the tone of the CEO's emails, or even a rumor spreading on social media? This means the agent of labor is changing. Banks prefer the cheap, 24/7 working power of silicon intelligence over expensive human labor. 90% of analysts are being phased out. What remains are only a handful of people to read the presentations prepared by AI and shake hands on the final deal. The destruction of investment banking doesn't mean the work stops. It means the workforce changes. High-paid, overworked analysts are turning into operators who merely interpret the data prepared by AI. AI eliminates human error in financial transactions. For banks, this means more profit. But this coded greed increases the risk for all of us. Because when all algorithms read the same data and react simultaneously, the next crash will be faster and more brutal than we can imagine. Traditionally one of the safest and most stable professions, accounting, working with numbers, maintaining order, and complying with tax law. But this profession may also have limited life expectancy. The accountant prepares our tax returns. They are our financial conscience. But what if I told you that AI can instantly find the mistake your accountant made in 10 seconds? Accounting is a profession of routine. Invoice entry, reconciliation, ledger keeping. AI has already taken over 80% of these tasks. Now, accounting software instantly reads a bank statement, categorizes it, and posts it to the ledger without human intervention. Human accountants make mistakes. They get tired. But what if AI prepares financial statements without a single error? Wouldn't that save small businesses hundreds of thousands of dollars in unnecessary expenditure? What about auditing? The great guardian of finance. They too are in danger. When major auditing firms use AI in their auditing processes, will an audit that used to take 3 months drop to 3 days? AI examines all of a company's financial records, even email and calendar data, to look for anomalous patterns. Where a human performs random sampling, AI analyzes the entire data set. This allows it to detect fraud or non-compliance at a very early stage that the human eye would miss. If the accounting profession is completely wiped out, what will be the role of the few remaining super accountants? Accounting is evolving from record-keeping to consulting. While AI handles the routine, the accountant must now offer clients strategic tax planning, risk management, and business model optimization. Those who cannot delegate the routine to AI and continue only with record-keeping will, unfortunately, be pushed out of the market. The end of professions like accounting and auditing shows us the ruthless face of increased efficiency. AI zero rates the error rate while drastically reducing costs. The remaining jobs are only the most complex, most demanding, and the most human. The routine belongs to AI. Strategy belongs to a few qualified human experts. You entrust your savings, your retirement, your life's financial plan to a person. It's a relationship based on trust. How is this relationship being threatened by AI? A financial advisor can understand your emotional goals. But how much better can AI draw a roadmap to those goals by using billions of data points? Meet Robo-Advisors. These are algorithms that analyze the risk tolerance, income stream, and spending habits of thousands of clients. These systems perform the analysis a traditional advisor takes 1 hour to do, in seconds, and create the most suitable portfolio. And the best part? Much cheaper. Robo-advisors are democratizing financial advice. But what about during a crisis, when markets are crashing? Is it more effective to hear the voice of a human advisor, or see a cold, "do not panic" message on a screen? This is the last refuge of the human element. AI is flawless at rational decision-making, but fails at emotionally managing people. Calming the client during a financial crisis, ensuring they make rational decisions, and showing empathy, these are skills AI cannot yet fully imitate. AI is great for low-budget investors, but the situation is different for high-net-worth clients. They will continue to need human advisors who can deliver the data prepared by AI with personalized service and provide support on complex issues like tax and inheritance planning. Robo-advisors are completely taking over the lower and middle tiers of the financial advisory sector. Human advisors will only exist for the most demanding services requiring psychology, empathy, and extremely complex situation management. If all a consultant does is portfolio creation, that profession is dead. The human must take on the role of emotional coach. When AI takes over finance, it doesn't just mean a change in professions. It means a change in our societal structure. Could AI predict major financial crises like 2008 and completely prevent them? AI simultaneously monitors market data, global political events, and economic indicators. It can detect even the smallest anomaly where a crisis begins to form. This provides regulators with the ability to act faster to stop a potential crisis before it escalates. However, what happens if all algorithms read the same data and make the same decision simultaneously? This is called algorithmic conformity. If the majority of algorithms in the market rely on the same risk model and all receive a sell signal at the same time, this could lead to a faster and more violent crash than any human-caused crisis. If AI knows more about our personal spending and savings than we do, whose interest will this information serve? Personalized financial services also mean personalized financial control. Banks, using AI data, can turn their backs on you financially for the rest of your life if they deem you high risk. This is the digitization of a financial blacklist. If an algorithm's wrong decision leads to billions of dollars in losses, who will be held responsible? The engineer who wrote the code, or the manager who approved the decision? The ambiguity of responsibility is the biggest ethical obstacle to AI seizing financial control. So, how is AI destroying the world of finance? The answer is simple: by destroying human labor. AI is not physically eliminating the financial system. It is eliminating its dependence on human beings. The routine jobs of investment bankers, accountants, and advisors are functionally dead. All that remains are the fewest number of roles requiring data interpretation, ethical oversight, and human empathy. We have handed control of the financial system to machines. Now the only question we should ask is, when will we take control back from the machine?